bottom might not be in for crypto yet, or perhaps we can say the bottom is in, but we could have another massive crash to retest those lows for crypto sometime later this year. In this video, I want to share some of the big things happening around the world in geopolitics, which could affect the cryptocurrency market, which are keeping all markets on edge right now, and some of the macroeconomic factors that we as investors need to keep our eyes on to see where the wind is blowing in the financial markets. My name's Lark. I make videos on investing. If you like that topic, like stay up to date with it, then please do subscribe to the channel. Of course, if you have a quick second to smash the thumbs up button, well, that'd be much appreciated if you did that. And as a reward for doing that, for taking that quick second to just give the thumbs up button some love, well, here's a picture of a kitten. Isn't that cute? Okay, now let's talk doom and gloom and why markets might still be in for a rough ride for the rest of the year. Yay. Okay, so let's first talk about geopolitics. Obviously, a very important part of the conversation here before zooming in on some of those key economic factors which we have to keep a focus on. Now first, the big news of the day is Taiwan, obviously. America, man. American politicians just cannot resist starting shit with other countries, can they? This time, they pissed off China by sending one of their highest-ranking politicians, Nancy Pelosi, over to Taiwan for a visit, basically just poking the hornet's nest for no real reason. Anyway, you can have whatever opinion you want on what's happening there and the Taiwan issue, whatever. That's not the point I want to make here. Here's why Taiwan matters to markets. Taiwan is the biggest producer of semiconductors in the world, controlling over 50% of the global market for semiconductors. Now, a supply disruption there would affect basically all electronic gadgets that you use. Semiconductors are in like all modern tech stuff. Plus, Taiwan sits right at the heart of the world's busiest shipping lanes. You think COVID messed up supply chains? Oh, just wait until we have a war in Taiwan. You ain't seen nothing yet. This would bring the global economy basically to a freaking standstill. Plus, pissing off China, or even worse, provoking a war, can have some pretty far-reaching impacts economically, since China's kind of like the factory of the world right now. Look at all the stuff you have around you. How much of it was made in China? Now assume that all that gets disrupted. If China turns off key exports, game over for the global economy, man. That's, the Great Depression of the new century. Hopefully cooler heads prevail. The U.S. stops fanning the flames of war and screwing with China right on the doorstep. But if we see tensions continue to rise, then things could turn ugly pretty quickly. So it's something we definitely need to keep an eye on as investors. The second geopolitical wild card, of course, is the gas crisis in Europe, or the upcoming gas crisis, especially around winter. See, Nord Stream 1 pipeline has actually been reduced to around 20% capacity. Nord Stream 2 has been canceled. Multiple European countries have also been cut off from Russian gas due to the ongoing political tensions over the war in Ukraine. Some of these countries have done that by their own choice. They said we don't want to buy Russian gas anymore. Others have done so by Russia's choice, saying we're not going to sell you gas anymore. We'll sell you gas, we have to pay in rubles. And then they said, no, we're going to pay in rubles. And hey, it is where it is. And again, right or wrong here, none of that stuff really matters. We'll have our opinions on it. But what's the economic impact of this ongoing crisis? Well, maybe Europe can scramble and fire up enough coal-powered plants by winter to meet demand, right? Things like liquefied gas ports and stuff, they take a while to build. It's going to take a while to get that capacity ready. But right now we're looking at a possibility where there's a major demand spike in the winter coupled with a supply crisis, which could lead to a big price spike for energy prices this winter in Europe. And if energy prices spike in Europe, guess what? They spike everywhere. That's a renewed surge for global energy prices. That would have major knock-on effects just like it did recently, right? We just went through this. We could be going through it again as winter comes. It could push inflation higher. It could tank equities even more. Crypto is going to get hit even harder than equities get hit. Now, before I get into what you need to be paying attention to in regards to the stuff with inflation and recession, real estate markets and all that stuff, I just wanted to snag a quick moment of your time to let you know about Wealth Mastery. This is my weekly cryptocurrency investor report, my newsletter that comes twice to your inbox every single week. It's awesome. It's value-packed. Our members love it. We talk about all kinds of crypto stuff, NFTs, altcoins, DeFi, making money in the bear market, finding opportunities every single week. Use the link down below to get signed up for free. Now let's get back into this topic. So the market, inflation. The market flipped surprisingly bullish after the 9.1% inflation numbers were announced for June, which is pretty surprising. Well, market participants are thinking that maybe inflation has peaked. We're about a week away from getting our next inflation numbers, by the way, for July. Now, if they're less than 9.1% and inflation has peaked, then markets could continue to be bullish. We could have a great August in markets. But the real risk now becomes, well, if inflation has peaked, could it stay stubbornly high for longer than expected? If it comes down from 9.1 to 8.7, then stays in like the 8% range for the rest of the year, that's bad. That could lead to a period of stagflation, with the economy stagnating or contracting slightly and inflation remaining high, which then leads on, of course, to the fourth factor, recession. Recession fears. Now, is there a recession? Well, in the USA, the White House is saying there doesn't seem to be a recession because their group of unelected stooges at the NBER has not declared a recession yet. That's convenient. But from a technical standpoint, 2 quarters of negative growth have been registered, and by the standard definition, not the new definition, that signals that a recession's there now. Could be just a very light recession, but a recession. And unsurprisingly, recessions tend to be bad news when it comes to seeing our portfolios making sick gains. Recessions mean fear. Fear means less consumer spending. Less consumer spending means businesses slow down because they don't have as much profits. They're not hiring as many people. People get fired from their jobs, which means more fear. Rinse and repeat until basically the economy capitulates. Now, during such a time, monkey pictures, crypto coins, pretty low priority for the majority of retail investors. Oh, there's always going to be people investing, 100%, but the waves of investors and speculators will not be here. Now, the fifth thing to have on your radar right now, of course, is a cool down in the property markets. New home sales are slowing. New mortgage rates, in terms of the amounts of mortgages being taken, they are at the lowest levels we've seen in 22 years. And it's not just the USA that's having a bit of a housing crisis at the moment. Home sales in China down 60% in a year. Falling house valuations lead to all kinds of problems. And again, it does not lead to a risk-on attitude for investors where they want to buy crypto coins and monkey pictures. All of which leads me to think that any bullish price action in the short term is more likely to be a bear market rally, to be a relief rally, at least until proven otherwise, until we regain those key levels we keep talking about in some of the analysis videos that I do. Now, maybe we have a very bullish August. I can see it happening. Maybe the weeks leading up to the Ethereum merge. Bullish. And then, blammo. Back down we go. Sell the news for the Ethereum merge, which is a major asset in the space, so would take the wider market with it. We can even take a look at historical precedents to make the case for caution in the market. As Rect Capital points out, by the way, he writes our technical analysis pieces for the newsletter, so great guy. Should definitely follow him on Twitter. But he points out the cycle bottoms for Bitcoin come in 517 to 547 days, at least in 2 previous events before the Bitcoin halving, meaning a Q4 bottom for Bitcoin and, yes, of course, the entire cryptocurrency market. History doesn't repeat, but it sure does rhyme often. And look, at the end of the day, markets, they don't like uncertainty, which is a lot of what we have right now. We continue to have all these big systemic risks and geopolitical events that are screwing with prices and supply chains and all this stuff. And until some of that gets solved, until some of that goes away, we remain in a time of caution for markets, caution for investors. Anyway, what do you think? Are we getting close to recovery for the markets? Is all the stuff that I've talked about here just, it's a bit overblown, it's not going to be that serious, we're going to be fine, market's going to pump again pretty very soon? Or do you think we're still looking for new lows, potentially sometime later this year? Let me know your opinion down below in the comment section. Thanks so much for watching today's video, and peace out till next time.